In this video, we're looking at task 2 of sample assessment 1 for audit and assurance. Task 2 is about professional ethics. So this question can be a bit tricky because some of the answers are judgmental. So you've got to think carefully about the information they've given you to try and work out what ethical approach would be best. So in part A, we need to identify the fundamental principle that matches the description below. The first one, to be straightforward and honest in all professional and business relationships. So remember that there are 5 principles, and this one is about having integrity, so being honest and having integrity. Next, to maintain professional knowledge and skill at the level required to ensure that a client or employer receives competent professional services. Well, the fact that they've got the word competent in the text would suggest that we want to choose professional competence and due care. So remember, professional competence is that we have the skills to be able to do our work, with the proviso that we could be supervised, because all of us need to learn how to do our work, don't we? But it's not enough just to have the skills. We also need to do our jobs to the best of our ability, and that is the due care part. So if we have the skills but we're a bit lazy and take shortcuts, then we would still be failing in this principle. And then to protect the information acquired from professional and business relationships, so that's about confidentiality, where we're protecting the information that we have. Because if we didn't, if there was a data breach, for example, then that would damage our reputation, and therefore people wouldn't trust accountants anymore. Then in part B, we need to complete the following statement about the external auditor's liability. So when an external auditor has been found to be negligent in their duties, the affected client can expect to receive. So if they're negligent, then this is going to be a civil offence, and therefore the person who is affected, the client, can sue for damages. So this is not necessarily a criminal offence where there'd be a fine or a penalty, but yeah, we could sue for damages because there's a breach of contract. Next then, Khadija is an external audit semi-senior working on an audit for Bobbins Limited, a manufacturer of cotton thread. She commences work on the payroll section of the file. As well as providing audit services, her firm also provides payroll services to audit clients. The payroll Khadija is currently auditing has been prepared by a colleague who works in the payroll department at her audit firm. So we need to decide what is the relevant threat to independence in this case. So remember, there are 5 principles. That's integrity, objectivity, professional competence and due care, confidentiality, and professional behaviour. And there are also 5 threats. We have self-interest, self-review, advocacy, familiarity, and intimidation. And a typical error that people make is mixing the principles with the threats. So in this case, it's asking about what is the threat, so we need to choose from the threats rather than the principles. Now in this case, because it's a drop-down question, we're not going to mix them up. But if this were a written question, you just need to be careful that you don't mix these. So in this case then, we're preparing the payroll information, so rather our firm is preparing the payroll information. Khadija herself isn't, but because the payroll numbers are included in the financial statements, it means that we will be reviewing our own work. So this would be a self-review threat. So what is the problem here? It could be that Khadija will think, oh well, we prepared this information in the first place, so it must be right. And therefore Khadija wouldn't review the numbers. So there would be negligence here because we're just going to assume that we did the work properly in the first place. The second possible problem, that Khadija actually looks at the payroll data in the financial statements and finds a mistake. And it'd be a bit embarrassing, wouldn't it, to highlight the mistake that we made. So Khadija might be tempted to brush the mistake under the carpet so that we don't look bad. So that's the second problem with a self-review threat. Right, we're further told that Bobbin Limited's financial director is very impressed with Khadija's work and asked Khadija to accompany her to the bank to support her in a loan application. So we need to decide now what sort of threat this is. So here's our choices. So familiarity, advocacy, intimidation. So there may be some familiarity here, because why would the finance director ask Khadija to do this if they weren't, sort of have a close relationship? But if it were to be a familiarity threat, the question would have to suggest that there was some sort of friendship here or some sort of close relationship, and it doesn't. What about advocacy? So for advocacy, this is where we would be advocating on behalf of the client, or in other words, that we'd be fighting on their behalf. And that's what's going to be happening here, isn't it? We're going to try and say to the bank, this is a really good company. Yeah, Bobbins is great, the finance director is great, so please lend them the money. Okay, so this is an advocacy threat because we are fighting for them. We're in their corner, aren't we? So why is this a threat? Let's remind ourselves what advocacy threat actually means. Remember, we're the auditors and we're supposed to be independent. So it's going to be difficult to say we are independent of Bobbins, but at the same time say, they're great, you should lend them money. Okay, so those two statements conflict with each other. How can we be independent if we're also fighting for them? And then in part 3, we're told, Khadija then moves on to the inventory section of the file. She requests a meeting with the inventory control manager. She recognises him immediately as an old school friend. So do you see there, that's the hint, the old school friend, that this is going to be a familiarity threat. We know them, and the risk is that we don't want to get them into trouble, so we might ignore any errors that they've made so that we don't affect our friendship. Then in part D, you work for Complex, an auditing firm that has been the external auditor of Top Cat Treats Limited for 12 years. Now your firm has been asked to be the external auditor for Perfect Treats Limited, a direct competitor of Top Cat Treats Limited. So you need to identify the most appropriate course of action that Complex should take. So here are the choices. As now the company is a listed entity, there is no requirement to take any action. Well, if we don't do anything, that's not brilliant, is it? So we're just sort of brushing this under the carpet ourselves, aren't we? Next, the audit partner needs to contact both companies in writing and advise them of the situation. So yeah, that's probably going to be the right one. We need to tell both parties about this potential conflict of interest. Now, if both of them are happy for us to carry on doing the audit, then that's great. We don't have to worry about it. But if any of them decides that they're not happy with the situation, then we'd have to stop doing the audit. So a good example of this from the real world relates to when Ernst & Young was created. So there were two different businesses, two different audit firms that merged together to create Ernst & Young. And one of them audited Coca-Cola and one of them audited Pepsi-Cola. So the two cola companies decided they didn't want to be audited by the two combined audit firms, and therefore they had to resign from one of them. Okay, now there's no requirement to resign, it's just that if we can't separate the two jobs clearly in our business, and if the two clients aren't happy, then we'd have to resign from one of them. So the third choice then, the audit partner only needs to contact his existing client to advise them of the potential new client. Well, no, that wouldn't work, would it? We need to talk to both of them so they're both aware of the situation. So yeah, the answer is the second one. Then in part E, we need to match the following statements with the threat to independence and the most appropriate safeguard. So we provide both external auditing and corporate taxation services. So what's the threat here? Well, the tax numbers could appear in the financial statements because there's a tax expense, isn't there, and a tax liability. So that means we'd be auditing our own work, and that would therefore be a self-review threat. So for tax services, it's allowed for us to do these two services, assuming that it's not a listed company. So what would we have to do here? So yes, if we use different teams, then they could do the work independently of each other, and we just have to make sure that the audit team did actually review the work of the tax department. And then you're working at a client's premises and are asked to supervise a work experience personnel your firm has engaged. The client's finance manager is their sister. Okay, so we can see because there's a sister here, then that is a close personal relationship with the work experience person, and therefore that's going to be a familiarity threat. Yeah, there's a relationship there, a personal relationship. So what are we going to do? Well, we need to make sure that we don't include them in the work. So yeah, we're going to rotate that person off the audit. And finally, in part F, identify whether the following statements regarding the disclosure of confidential client information without first seeking permission of the client are true or false. So remember, we have this duty of confidentiality. People would not trust us if we went down the pub and told all our friends about the clients we were working on. But in some circumstances, we might have to break that duty of confidentiality and disclose information. Now, hopefully you remember from your studies that if the client gives permission, then that's fine. We don't have to worry about it. We can breach that confidentiality in any situation if the client gives us permission. But in this case, it's saying that, well, what if there is no permission given? Are we allowed to do these things? So the first statement then, it is acceptable to disclose confidential information if required to do so by a professional body such as AAT. So yeah, that is true. If we have an obligation, a professional duty to report, then yeah, that would be okay. Next then, it is acceptable to disclose confidential information when asked in a court of law. Well, that is true as well. If the courts instructed us to provide evidence and we refused to do so, then we'd be in contempt of court and we could go to prison for that. So some people are allowed to keep things secret. So priests, for example, can keep information given to them in confession secret, and also lawyers acting on behalf of their clients are allowed to keep information secret, but that does not apply to auditors. And finally, it is acceptable when another professional accountant has requested the information. So no, we can't do that. We would need the permission of the client before we gave information to another accountant.